Hello everyone, this video lecture covers Learning Objective 4, which is a relatively simple prepare journal entries for a process costing system. It's not going to be that complicated. And I'm going to skip Learning Objective 5. So basically when you have two departmental issues, so you transfer from one department to the second department. I'm going to cover that in my advanced cost accounting. So for accounting students, you're going to learn that when you come to see me in accounting 3030, maybe next year. So the journal entry used in the process costing system, I would say they are very similar to the ones we used in job costing. So there are a few things differences here. The manufacturing costs are assigned to processing departments rather than the jobs. So that's one difference. So you have processing departments. So for example, you may have a department 1, department 2, department A, B, C, whatever. At the end of the month, a journal entry must be made to transfer costs to the next processing department, so which is quite tricky here. So these are the only two differences, and in terms of journal entries, similar, debit, credit, and always balanced. So for instance, like direct materials were requisitioned for use by Department 1. So what's happening here is you have a work in process inventory, that's for shipping, assuming that shipping is the first department. Then when you require the made a requisition for direct materials, then the cost flow will be from the raw materials inventory to work in process inventory. So that's how you see that credit posted to raw materials and a debit posted to the work in process. Then next is about the labor. So when you have a labor, then the cost also flows from wages payable to the work in process. So wages payable, that's actually liability account. You see the credit, and for the work in process is the debit, so which is well balanced. So manufacturing overhead is also we use allocation. We use allocation here. So assume that we have a $50. That's the overhead rate, and this department, the shipping department, used 935,000 machine hours. Then we multiply $50 by 935 machine hours. Then we end up with 46,750. So the same here, you have allocated manufacturing overhead, which is that much credit, and the working process will receive a debit. Okay, debit. So next is in terms of a T account, and that's what's happening here. The working process, in the beginning you have zero balance, and you received 140,000 direct materials debit, and 21,250 debit direct labor, and the rest of manufacturing overhead. Okay, so the next thing is about when you transfer from one department to the other department. So for example, you have some products completed and transferred in the shipping department, then you are going to transfer them to the insertion department. So there's a certain kind of cost flow here. So therefore the shipping department will receive the credit to show the transfer out, and the insertion department will receive a debit to show the transfer in. So that's how you get that. Okay. So next we can take a look at this particular question. Maybe we can work on some of these journal entries together. So the question says okay, return to the blending department for the Lucy paint company in EA 27A. We're going to get back to that particular question. This is 28A, then we will go back to 27A. It's a continuation of that example, so just be patient. We're going to get in the next slide we will see this particular question. So the requirements present the journal entry to record the use of direct materials and the direct labor and the allocation of manufacturing overhead to blending department, and also give the journal entry to record the cost of gallons completed and transferred out to the packaging department. So you have two departments, and from blending to the packaging, and post the journal entries to the work in process inventory blending T account. So the first department. Now what is the ending balance? So if you look at this question, just before you go to the E5 27A for the numbers, you can think that in your mind. It's kind of similar to the prior slides I just mentioned. So you're going to post the journal entry, direct materials to work in process cost flow, direct labor to work in process cost flow, and manufacturing overhead allocated to the to the work in process cost flow within blending. And after that, you are going to have some cost flowed from blending all the way to packaging because of transferring of finished products. And finally, the work in process inventory in the blending department, the first department, will receive a credits, debits, or whatever. So you can play with these numbers. So let's go to this question, the E527A. So this is what we have here. So this company prepares and packages paint products. The company has two departments, blending and packaging. Direct materials are added at the beginning of blending and at the end of the packaging process. The conversion costs are added evenly throughout each process. The data from the month of May for blending department are as following. Okay, so we have a beginning working process 0 and started production and 8,000 whatever numbers, completed transferred out. So I don't really care all these units because of all I care is basically the ending, right? The ending part. Okay, the ending part basically what a cost added to working process, and also ending inventory, so that I can do the transfer, all these things. So cost beginning working process inventory has 0 because you have 0 units, and cost added during the May, we have direct materials, and we have direct labor, and then we have manufacturing overhead, and the total cost added during the May is this much. So therefore, in terms of journal entries, it's going to be quite simple here. So what's happening here is we have working process called blending, right? So we are going to see the cost of flow from raw materials to blending. So the question gives us $5,460. So all the direct materials will flow into this working process. That's how you see the credit and debit. And this journal entry is pretty easy to follow. The next is the labor. The labor part is 920. So we have 920 debit credit, right? So one is for working process, one is for which is payable. You can see the cost flow as well. So next, the next is about manufacturing overhead. So same thing here. You can see the allocated manufacturing overhead, which is 1,912. So which is right here. So you probably don't see any differences, right? Difference here. So the next question is a little bit tricky here because you do have to know the cost of the CGM. We call it CGM. So this calculation is a little bit tricky because you have to use a learning objective 3 to do that, and it will take a while to get the work done. So at this moment, I'm not going to show you that. I would expect you to work out all these questions, work out all these details. But let's assume that after you apply the learning objective 3, and for 8,292, this amount of cost, and we find out that $6,510 out of $8,292 has been assigned to the units completed and transferred out. So therefore, you're going to see the cost flow from the blending to the packaging in that amount. So that's why you see the debit to the packaging WIP, and you see the credit to the blending WIP in this amount, 6,510. So I would encourage you to go through the equivalent units and find out the unit cost, then assign the cost to the CGM and also to the ending balance in the WIP to figure out, okay, how I'm going to split this $8,000 into two parts. That's how you do. So next is the T-journal work. The T-journal work is relatively simple here because all you have to do is summarize all prior journal entries. So you started with a 0, right? And you have direct materials, which is 5,460, and the direct labor and the manufacturing overhead. However, don't forget that you have a cost transferred out. Cost of flow out from a blending to the packaging, which is 6,510. So this dollar amount will be also showed in the credit. So you have a bunch of debits, you have one credit. So the ending balance actually is a debit balance, which is 1,782. That's the WIP and inventory balance in blending department. Okay. So this learning objective 4 is relatively simple here, and I hope you have a better understanding in terms of business transactions and help you understand the process costing further. So thank you for watching this video, and this is the last video for in chapter 5. Okay, and I hope you will enjoy the quiz questions. If you need any help, feel free to talk to me. Thank you very much.